welcome to IGTV, and this is your special look ahead to the week starting the 15th of April. Now, it's been such a huge week with not just bank earnings, but also hotter than expected numbers out of the US has pretty much changed the first Fed rate cut timing. But let's just get you across what we're looking out for next week. We've got the industrial production numbers out of the Eurozone, also US retail sales that will be key after those hotter than expected inflation numbers, business inventories, housing market index to boot as well for Monday. Then on Tuesday, China's Q1 GDP growth rate will be key, along with industrial production. The UK has unemployment numbers in a week when it also has growth results out. And it's a ZEW from Germany that will be the key focus. Also, watch out for industrial output numbers from the US. Midweek, as I mentioned, it's that CPI figure out of the UK, now that the ECB and the Bank of England are the ones to eye for the first rate cut after the expectations for the first Fed rate cut was pushed back even further now into the autumn. The last time I saw an expectation chart. And from the US, it's the Fed Beige Book that will be key. Australia's unemployment rate comes on Thursday, along with initial jobless claims and existing home sales from the US. And on Friday, the main one will be retail sales out of the UK and also the producer price numbers out of Germany. Well, to discuss all this and put it into perspective is Tom Sosnoff live for us from Tastylive from Chicago. Thank you so much for joining us as you're about to step onto transport to get all the way to New York. It's been such a key week, Tom. We've seen volatility spike. Is that going to continue? And where and how can investors trade this?
Well, I don't know if the volatility spike is going to continue, but it sure looks like we are in for a stretch where the expected move is going to be about 25 to 30% greater than it's been for the last, like, let's call it, 3 or 4 weeks. So we've gone from an expected move for the week of about 50 handles in the S&P, higher to lower, to about 70, 72 handles. So that's a pretty big jump. And so investors can expect, much wider swings than in the S&Ps, and that means much wider swings in the underlying stocks. And I think that's kind of interesting. You also touched on the bonds a little bit. We haven't seen basically a 115 print or a 114 print in the long bond for a long time. And we got there this week, which throws the bond market back into play. And I think that's also a really exciting place. If you're looking for opportunity, bonds are definitely the lowest that they've been, which means rates are the highest they've been in a long time. And that has created a ton of trading and a ton of interest in the bond market. And then if I go to the last topic where we've seen a crazy amount of business this week in commodities is in the gold and silver markets. They've just exploded, and they've gone to levels that, basically new highs in gold, and not silver, but gold. But the moves in these underlyings have been way outside of the normal expected move. So traders, listen, a lot of us have gotten run over in gold and silver. So I don't want to say it's been easy, because it sure hasn't. But those moves have been just ginormous, and the amount of liquidity in there is great. So they're very tradable vehicles. Just be careful and stay small.
And that's a really good point that you mentioned, because that PPI was a little better than expected, but not by a huge amount. Bond auction wasn't terrible. Bonds continued to sell off, as we saw, and as you rightly said, gold went a bit crazy. Many out there that I've been speaking to have said that this really suggests that there's been a lot of algo trading involved, that jump in and buy when without human intervention. Would you say that you agree with this or not?
No, I don't think so. I mean, there's always algo trading, but algo trading is very different than what most people think it is. Most of the algos that remember, the counterparty to every trade that everybody makes is a server now. It used to be, a person, now it's a server. But the idea of algo trading, I think it's very confusing because it sounds on the surface that these machines are just making trading decisions. They're really not. What the machines do is they just hedge the order flow. And so any kind of algo trading that's effective is really just hedging the other side of whatever order flow is coming into, basically that they're facilitating. So much of the algo trading, I don't think that's what's moving the markets. The markets are, though, a little bit more, I would call them, commodity markets are always trendier than stock markets. Commodity markets have a much more passive element to them, and they tend to see all buyers or all sellers rather than a lot of two-way trade. And in the stock market, you'll see a lot more two-way trade because there's natural sellers. There's natural longs of everything. In the commodity markets, they're not natural longs. Like nobody's naturally long gold or nobody's naturally long crude oil. Unless you're a hedger, but for the most part, there's nobody naturally long. But in the stock market, people are naturally long, so that creates selling pressure at some point. So commodities trade differently than stocks, but I don't think this is an algo as much as I think it's just a market that it kind of caught a trend and that's it. And commodity markets do that from time to time.
Thanks very much. Tom Sosnoff there from Tastylive in Chicago. We'll be checking in next week, I'm sure, for more on gold and where the U.S. economy and stocks there are heading. It's also going to be a busy week. We've already had the start of the U.S. Banks earnings season with JPMorgan, Wells Fargo and Citi out with numbers. But next week, it's going to be equally busy with Goldman Sachs out with first quarter numbers, Page Group as well. And then further on midweek, we get LVMH, Bank of America, another big one, UnitedHealth as well, Johnson & Johnson and United Airlines. Watch out for what it says about that incoming summer squeeze. And we've got ASML Holdings, Alcoa is another big one, Rio Tinto as well, out of the mining space. Those will probably move the commodities markets when they're out. We also have EasyJet out with first half trading numbers. Many of our clients have open positions on EasyJet. Watch out for Danone, L'Oreal, and of course, the big one from the US is Netflix. And on Friday, Schlumberger, Sodexo, Procter & Gamble, and American Express deliver their quarterly earnings. And that's your latest look ahead to the incoming week. Really busy there, punctuated by not just UK growth numbers, but also a continuation of big US banks reporting. I'm Angeline Ong, and this is IGTV.